In this grade 12 accounting video, we are looking at still the 2024 May-June question paper. This time, we are focusing on the cash flow statement question. That cash flow statement question starts with a retained income note. So we are also going to look at a retained income note. And as well, what comes with this question is also a question on internal control, meaning that it's a theory question. So they're asking you about the decisions of the company, meaning that it is somewhat of an interpretation, because when you're dealing with cash flows, you are going to get a little bit of a financial indicator as well as a little bit of internal control. So this one has internal control. Our question paper is still linked in the description box below, so make sure that you go download it, as well as the answer book. And we are looking at question 2 of the same question paper. By the way, when you hear me saying of the same question paper, it's because we have already looked at the first 2 questions from this question paper, which was the income statement, or our statement of comprehensive income, as well as the statement of financial positions. Those videos are already up right before this one, so if you haven't seen those, make sure that you go look at those. So let's look at our cash flow statement question. And you see there it says cash flow and interpretation. The interpretation is that internal control part of it that I talked about. So we are looking at Drua Limited. It's an apparel company specializing in the sale of rugby jerseys and other rugby apparel. In 2.1, it says calculate the cash flow from operating activities section of the cash flow statement by completing the following. It has A up to E of the things that you're going to have to do. And then in 2.2, that's where we're looking now at the cash flow from financing activities section of our income statement. In that part, that's where we are going to look at our retained income note first, and then after that we are going to go back to completing cash flow from financing activities. Then in 2.3, that is our interpretation part, meaning our internal control part. It says the cash flow statement reflects some important decisions made by the directors over the past year. Explain one good decision and one bad decision made by the directors. Provide calculations and figures to support your answer. So it's an internal control or an interpretation question. You will see it when we get to the chapter of internal control. Right now, we are going to go back to looking at our cash flows from operating activities. So that's what we are going to start with in the next chapter. By the way, the video is divided into chapters, so if you come back to it later and you are looking for a specific part, you can easily skip to the chapters that you want. So in this chapter, we are looking at the part of the question paper that focuses on cash flow from operating activities. It says calculate cash flow from operating activities sections of the cash flow statement by completing the following. Let's start with A. In A, they say they want us to calculate the operating profit before changes in working capital. So basically, when you look at A and B, they're both the note 1 of the cash flow statement, but instead of completing the whole note, they have divided that part into sections. So we're going to look at the operating profit from changes in working capital. So that note 1, this is me showing you what the note 1 incomplete looks like. You start with profit before tax, then you have your depreciation and interest expense, then that's where you get your operating profit before changes in working capital. So when we go to our information, that means you're going to look for your profit before tax, then you are going to look for your depreciation and your interest expense. You add them to your profit before tax, and that's what's going to give you your operating profit before changes in working capital, because that's how it is in the note 1 of your cash flow notes. So that's exactly how you're going to do it. With the only difference is we are doing it outside of a note, but we are just doing it with a calculation. So basically, it's as simple as take profit before tax, add depreciation, and add interest expense. So when we look at information A is the extract of list of balances. We see my profit before tax is 1,995,000. My depreciation is a question mark, so I'm going to look for that. But my interest has been given to me as 185,000. So the only thing that I have to worry about now is the depreciation, because the depreciation and the interest are going to be added to the net profit before tax. The net profit before tax has been given to me. The interest has been given to me. The only thing I'm missing is my depreciation. So how do I get my depreciation? To get my depreciation, I'm just going to take my fixed assets. You see the carrying values. If I minus the one from 2003, from 2023, from the one to the 2024, that's going to give me my depreciation. So look at what I did. I just did it simply in my calculation. I started with my net profit before tax of 1,995,000, and then I said plus, and then in brackets I did what I mentioned about how I'm going to figure out my depreciation, because they didn't give me any other information to figure it out. So I took the 2,884,000 from 2023 and minus the 2,314,000 from 2024 in bracket, and then I also added my interest expense, and then I did my calculation. It gave me 2,750,000 at the end. So that's what I'm going to see put as my A. So in your answer book, you are just going to put the calculation exactly as we did it in your space for answer A. So we don't have to put it in our answer book, but the answer book is in the description box below if you're looking for one. Then B, it says changes in working capital. You must also indicate whether it's an increase or decrease in the item. Circle or underline the correct option provided in the answer book. So now we are doing the changes in working capital. So our changes in working capital in my answer book, they have already done for me inventory. My working capital, by the way, means inventory, debtors and creditors. So for my inventory, they have already calculated for me. And then for my debtors and creditors, that's what I have to do for myself. It starts saying increase/decrease in debtors. So I'm going to determine if they have decreased or increased. If they have increased, I'm going to underline under increase, and then I'm going to show my calculation as well as put my final amounts. If it's an outflow, I'm going to put it in brackets, and if it's an inflow, I'm not going to put it in brackets. So let's go ahead and get started with my debtors. So I'm going to go to my information A, which is my extract of list of balances, and I'm going to look at exactly at my trade debtors. So you see debtors control used to be 139, now it's 122, so it has decreased. But you have to be careful, there are other things that can affect debtors. So one of those other things is a deposit for water and electricity. So to the 139 you have to add the 15,000, and to the 122 you have to add the 30,000. So basically I'm going to say the 2024 amount, and I'm going to the 2023 amount, and I'm going to minus the 2024 amount. So keep in mind that for 2023 we're working with 139 as well as the 15,000, and for 2024 is the 122 as well as the 30,000. So you are seeing I have said 139,400 plus 15,000 in bracket, and then both of them they minus the 2024 amounts, which is the 122,800 plus 30,000 in bracket. They both give me a decrease of 1,600. I have underlined decrease. It's not in bracket because when debtors decrease, it means that debtors came and paid you, so that becomes an income, which is an inflow. So now let's look at my creditors and do the same thing for my creditors. In 2023 it used to be 104,300. In 2024 it's 89,200. Again, we are also going to look at what else affects my trade creditors. You can see that we are having a SARS payee right before it. SARS payee is me paying my SARS for my employees. So basically that's an amount that I owe to SARS for payee of my employees, right? So for the 104,300 of 2023 we are going to add the 14,780, and to the 2024 amount we are going to add the 12,500, and that's going to conclude my creditors amount for both of those years. And because we are dealing with creditors, we are now going to take 2024 and minus 2023. If your amount is negative, As you are seeing there, we have a negative 17,380. That means it's a decrease. The decrease will be in bracket. Why? Because with creditors, when creditors decrease, it basically means I paid my creditors. If I pay my creditors, that is cash leaving my bank account to pay my creditor. That's why it will be in brackets. Then lastly, we are going to total, starting with the inventory amount. So minus 135 plus 1,600 minus 17,380, and that's going to give you a minus 151,630 as your changes in working capital. Then we move on to C. In C, we are calculating income tax paid. Not to be confused, you will see in our list of balances we have two SARS. There's a SARS that's an income tax, and we have a SARS that's a payee. The SARS that's a payee, we've already dealt with it when we were dealing with creditors. We are going to look at a different SARS. The SARS that we are looking for is a SARS that has income tax in brackets. So look at our list of balances again in extract A. We are looking for specifically three amounts. The first amount is that 27,000 on the debit side you're seeing in 2023. The second one is the 48,000 on the credit side you are seeing in 2024. We are also looking at the income tax for this year, but they didn't give it to us. What they gave us was the net profit before tax and the net profit after tax. So when you minus those two amounts together, you're going to get the income tax for this year. So now what that means is the income tax for this year, meaning the amount we are going to get when we minus those two amounts together, is going to be an outflow, meaning we minus that amount. Why? Because we have to pay it. The 27,000 you're seeing is supposed to be an inflow. Why? Because they said it's on the debit side, meaning it's a refund, so I'm making an income. Whereas the 48,000 is on the credit side, that means I owe it, but I'm only going to pay it next year. So it's going to be a plus as far as this year's books are concerned. So you look at C, my income tax, I started with a positive 27,000. It's a refund from last year. I'm going to get it this year, so it becomes a positive amount. Then I minus the income tax amount that goes in my statement of comprehensive income. How do I get it? I take net profit before tax and minus net profit after tax. Then you add your 48,000 like we explained, and then you work everything out in the calculator, and in the end it gives you 523,500 in bracket to show that it's an outflow because we are paying that tax. Then next in D, or required D, we are calculating now our dividend paid. Our dividend paid, basically we pay the final of last year. So last year's final dividend, we are only going to pay this year, and then we are also going to pay this year's interim. The only thing we're not paying is this year's final, because this year's finals will be paid next year. So in our information, we are looking for last year's final as well as this year's interim. So last year's final, we're looking at shareholders for dividends. Shareholders for dividends is another word of saying final dividends. We see that the final dividend for 2023 was 107,250, and the one for 2024 is 157,500. I'm not interested in the 157,500. I'm only interested in the 107,250 of last year because I'm paying it this year. Then to that amount, I'm going to add my dividend paid. So I have to go and find more information on how much of interim did we pay this year, because the 157, I don't use it anyway. It's only going to be used next year. So the 107,250 from last year, then go to my information and look for my dividend paid. It says there in information for that the total dividend paid for the year is 372,250. Total, meaning that it includes the interim of this year and the final of this year. Remember, I'm not interested in the final of this year. So look at what I did. I took the 107 of 250 of last year and I plus it with, in bracket, I'm working out now, I'm trying to figure out the interim only of this year. So I take the total of this year, which is 372,250, and I minus the final of this year. So when I minus the final of this year out of our total dividend, what am I left with? I'm going to be left with an interim of 214,250. Add those two amounts together, I get 322,000, also in bracket to show that I'm paying it, and therefore it's a cash outflow. Then lastly, we are calculating cash flow from operating activities. So we're doing all these individual things. If you know cash flow from operating activities, you know that it's cash generated from operations, which we calculate, we can get it by taking the final amounts of A and B, and then we are going to minus income tax paid, which is C, and dividend paid, which is D, and then also our interest, which we already given in our extract. So you see it, this is a framework of your cash flow statement. The part 4 of cash flow from operating activities, which is what we are called to calculate. It starts with cash generated from operations. How are we going to get that amount? That is the two amounts of A and B, and then our interest expense was given to us in our extract, and we just calculated dividend paid and income tax paid. So you will see that I started my calculation with the 2,250 from information A. Remember information A, we were calculating operating profit before changes in working capital. So it gave me 2,750,000. Then I minused the amount I got in B. Remember in B I was doing my changes in working capital, and it gave me in bracket 151,630. That's why I'm minusing it, because bracket means that we are minusing. So the 151,630 is minus. Then next I minus my interest expense. My interest expense was given to me in my extract A in interest on loan. It says it's 185,000. It's interest that I'm paying, so it's obviously a cash outflow. So I'm going to minus the 185,000. Then next I minus my income tax paid. Remember my income tax paid, we calculated it in C. So C gave me minus 523,500. Why minus? Because it's a payment, so it's a cash outflow, so that's why we are minusing it. And then lastly, we minus my dividend paid that I just calculated in D, and D gave me 322,000. So that's what I minus there, minus 322,000. Put everything in your calculator, be careful with your zeros, and you should get 1,557,870 as your final amount. So basically, we were doing the cash flow from operating activities by calculating everything individually instead of doing it in the framework. So you can expect such things when you're doing your question paper. Then we move on to our retained income note, meaning that we are now in 2.2 of our question paper. It says to calculate the cash flow from financing activities section in the cash flow statement by completing the following. The first thing it needs you to start doing is a retained income note. Why? Because there's a lot of information in the retained income note that you are going to use to calculate your cash flow from financing activities. So basically, it's made to make things easy for you. So let's remind ourselves of how the retained income note looks like. It's given in your answer book. They have already entered for you the balance at the beginning at 1,875,000. What I need to do is enter my profit before tax, the after tax, that would be my next line item, and then from there, I'm also going to put in my repurchase shares. But let's go step by step and look at my profit after tax from my extract of list of balances in information A. Remember, they said the net profit after tax was 1,396,500. So I don't have to calculate anything there. I just have to take that net profit after tax and plop it in my answer book. Had they only given me the net profit before tax, what I was gonna do was look for my income tax, then minus that from my net profit before tax, and it was gonna give me net profit after tax. And so in this case, my net profit after tax, just as it was from the extract, is 1,396,500. So we took it just the way it was and plopped it there. Then the next thing is my next line item is going to be repurchased shares. So for my repurchased shares, because this is the retained income note, we are looking for the price that is above, meaning that you know how in ordinary share capital we use the average price. So if you look at my bullet number 4 in Roman figure 1 of information B, it says a number of ordinary shares were repurchased from unhappy shareholders. These shares were repurchased at 17 rands 50 per share. The average price was 12 rands 750 at the time of the repurchase. So what I'm saying is, if we were doing an ordinary share capital note, we would use the average price of 12 rands and 75. But now, because we are doing a retained income note, what we need is the difference between 1750 and 12,075. What are we going to use that amount on? We are going to use it on the amount of shares that were repurchased. In this scenario, they didn't give them to me, so I have to calculate it for myself. How do I do that? I'm going to use, look at bullet number 1 says 1.5 is ordinary shares, so I'm not going to use that one. What I'm interested in is bullet number 2. It says 650,000 shares were issued at the end of the previous financial year, so that means those are my opening shares. Then up to them, I'm going to add bullet number 3, which is 100,000 ordinary shares that were issued on 1 January 2024. So those two, they're in bracket because they are all the shares that I have issued. Then I'm going to minus the shares that I have in issue at the end of the year. That's the last bullet that says 700,000 ordinary shares were issued at the end of the financial year. What that gives me is 50,000 shares that were repurchased. Then that 50,000 shares is what I'm going to multiply with the difference between 17 rands 50 and 12 rands 75. So you can calculate that amount on the side and just multiply it with the 50,000, or you can do it the way I did with showing the calculation of everything in your brackets. Either way, if you are correct, it should give you 237,500. The 237,500 should be in brackets. Why? Because it's a repurchase of shares and it should show that we are repurchasing shares. Then we move on to our ordinary shares and look for by interim dividends. So for my interim dividends, we know that we were not necessarily given my interim dividends for the year. What we were given was the final dividends in shareholders for dividends is 157,500. That's the 2024 one. And then we are going to go into my information to look for interim dividends. In this scenario, they didn't give me interim dividends. What they gave me was my total dividends. So what I can do is I can take my total dividends and minus my final dividends, and what that will leave me with is my interim dividends. So my total dividend is in information form 372,250, and from my information you are seeing again that my shareholders for dividends is 157,500. So I'm going to take those two amounts and I'm going to minus them as I'm calculating my interim dividends in my answer book. So you see in bracket I said open bracket 372,250, which is my total dividends, minus my shareholders for dividend, or rather my final dividend of 157,500, and what that leaves me with is an interim dividend of 214,750. There was a calculation where we came across this when we were calculating dividends paid. So basically it's the same thing, it's just that here we were simply looking for my interim only, and that completes our retained income note. The next thing that we are going to do now is move on to our cash flow from financing activities, which is still question 2.2, but now we are looking at B of that same question. It says the cash flow from financing activities. That's what we are calculating. Our answer book shows us that they have given us a very empty table for our cash flow from financing activities, so it becomes up to you to know what exactly goes into our financing activities. Those items include things like proceeds from issued shares, a decrease in loan, as well as the amount that we use to repurchase our shares. This time we are looking for the total amount. But let's start with our proceeds from issued shares. So when we are looking at my ordinary share capital, you see that they used to be in 2023 7,800,000, and in 2024 they're 8,925,000. So basically we are trying to use that information to calculate how many shares are in issue, or how much it cost us in terms of the issued shares. However, in those amount, we have to account for the shares that were repurchased at an average price. So meaning basically we need to subtract from that amount the amount of the shares that were repurchased back, because we are going to account for them as a separate line item. So we need to take them out of the proceeds for shares issued, because we are going to have a line item that says shares repurchased. So to calculate my shares repurchased, I do that method of finding out the number of shares. We said we will take the 650 plus with the 100 and then minus the 700 at the end, and it gives me 50,000 shares. And then I'm going to use them now at the average share price. Why? Because at the average share price is what we use when we're doing a ordinary share capital note. So our average share price was 12 rands and 75 cents, and when I multiply it with the 50,000, it gives me 637,500. This 635,500, because it's already accounted for in the ordinary share capital note, I need to take it out of my ordinary share capital, or proceeds from my issued shares, because proceeds from my issued shares, meaning it's an income when I was issuing shares, and then this one doesn't become an income, because repurchase shares, it's me giving out money to buy back shares. So this one is not a proceeds, so that's why I need to subtract it out of my profits. So you will see that in my calculation I put it calculation A there. Why? Because there's not enough space. So but then I said the ordinary share capital of last year, which is 7.8 million, and I minus that 637,500, because why? It's repurchased, so it can't be in there, it's not a proceeds. Then I minus the total for this year of 8,925,000, and it gives me 1,762,500 as my proceeds from issued shares, and that's why I have put it in there like that. Because why? If they didn't repurchase any shares, for example, I would have simply just taken the amount last year and subtracted the amount this year. And yes, that amount is going to be negative. It's correct that way. There is a reason behind it, but it's more of a first year of university accounting type of a thing. So we are going to leave it at that. Your next line item is going to be repurchased shares, but this time I'm trying to account for the entire amount of cash outflow that I paid for my repurchased shares. So that means I'm going to find my number of shares like we did before, the 650 plus the 100,000 minus the 700, and it gives me that 50,000 shares. But now these 50,000 shares, I'm going to multiply them with the 17 rands 50, because that's what I paid for this repurchase. I hope you are noticing how many times we've had to use the number of repurchase shares, so you're realizing that if you got this number wrong, then it messes up a lot of things. However, you could still get your operational mark provided that you were moving with your mistake. So our 50,000, I multiply it with 17 rands 50, and it gives me 875,000. I put it in bracket. Why? Because that is the entirety of the amount that I paid or I financed for repurchasing my shares. Again, now we are doing cash outflow from financing activities. So the cash flow from financing activities, the total cash flow I paid there was a full 875. It's just that in other notes, when we're doing financial statements where we have to separate the average price and the amount above the average price in the written note and the ordinary share capital note, but in the financing activities you put in the whole total. This is how it works in any question paper that you find. In ordinary share capital, you use the average price. In retained income, you use the amount above, and in financing activities, you use the exact amount that you paid. The last thing that goes in there is a decrease on loan. We are seeing in Roman figure 3 there, it says interest on loan has been capitalized, and then it says payments including interest for the year were 710. We account for interest separately. We did it in financing activities from operating activities, so we need to minus it out of that 710. How much was my interest? I go back to information A. Remember, it was 185,000. So basically I have to take that 710, because that 710,000, it says it includes this 185 in it, and the 185 I have already accounted for it. Remember, when I was doing my my cash flow from operating activities, that's where I have entered it. So if I enter it here, it will be double accounting, so I simply need to take it out of my 710. So you're seeing there a decrease in loan is my calculation. See, I took the 710 they said was my repayments, and I minused my interest, because I have already accounted for it, and it gives me 525,000. I'm going to put the 525,000 in bracket, because a decrease in loan basically means that I went and paid my loan. That's why my loan amount has decreased, meaning what I'm owing is less. How does it become less? It becomes less because I paid, and when I pay, it means it's cash coming out of my bank account, so that becomes a cash outflow, and that's why you are seeing that amount in bracket. It's supposed to be in bracket to represent that it's a cash outflow. Then lastly, I'm going to total my cash flow from financing activities. So I'm going to take my 1,762,500 minus 875,000, and then again minus 525, and it gives me a total of 362,500 as my cash flow from financing activities. And that concludes our question on the cash flow statement. What's left is the internal control part of our question, meaning we are now looking at the interpretation or the theory of the cash flows. So when we look at our information in 2.3, or our question rather, it says the cash flow statements reflect some important decisions made by the directors over the past year. Explain one good decision and one bad decision made by the directors. Provide calculations and figures to support your answer. So most of this you will find out that we have already gone through it, because it says from the cash flow statement. So it's going to be calculations that we have done over and over again, but we are going to look at some more decisions just to see what the clear decisions that the directors have made, and we are going to decide which ones are good decisions and which ones are bad. Now let me tell you something about interpretation. If you can reason well, any decision you pick could be right. Like, there is no right and wrong necessarily, depending on how you reason. So for example, when we look at our information, you see that I have some money in my bank account. The bank account says 1,000,456,700, and it's on the debit side, so it means that I have that money. And it also shows there that I had some net profit after tax that I had of 1,396,500. So with that in mind, when I look at my information, keeping in mind that this business had some money on it that it could have used for other things. So for example, when I look at the Roman figure 2 in information B, they're saying fixed assets were bought or sold during the financial period. That to me could be a bad decision. I could say it's a bad decision because they could have used that money to buy some cash generating assets, right? Because a cash generating asset means that it will help you make more profit. Another thing that I'm looking at that could be a good decision for me is Roman figure 3 that talks about the payment of a loan. They said that they paid 710 in loans. So basically they have reduced their loans, which means it's improving their credit worthiness as well as their debt equity ratio. Those are my reasoning. But I want to show you why I said that you could never go wrong. You could say that not buying any asset was a good thing because it means that they can use that money to repay loans. You see what I'm saying? And you could say that them paying their loans was actually a bad thing because they could have used that money to pay for something else, like pay shareholders and make their shareholders happy. It's all about how you reason. So for my reasons, I said for my good decision, they decreased the loans with 525. We have already seen how we calculated 525 when we were doing cash flow from financing activities. My explanation is reducing the loan will help improve their credit worth. Then for my bad decision, they made zero. I'm stating that it's zero because they wanted figures, right? So the most important thing is here is for you to show figures. They made zero investment in fixed asset because it said they bought no more fixed assets, right? So if I just said they didn't buy any fixed assets, that decision lacks figures. So because I wanted a figure, I said they made a zero investment in fixed assets, and my explanation is they should have purchased more cash generating assets. Any reason, so long as you have your figures and you have your explanation, is going to be correct. So you can never go wrong unless you don't give any explanation. And that concludes our cash flows question. Now, if you need one-on-one help with anything that we have covered in this video or this subject in general, we have a visual program that can help you with just that. From anywhere in the country, all you need is an email and a WhatsApp, and we are able to give you personalized help for a monthly fee. This will cover full lesson recordings as well as notes and study materials for any of your subjects that you need personal help with. This will include some of the subjects that are not even covered on this channel. For example, subjects like history. You will soon see our full subject list. We will also cover scopes for those specific subjects as well as attempt past papers together. But what's most important about these virtual sessions is that you get full-time communication, meaning from the hours of 8 o'clock to 4 p.m. you are able to send in your questions. Even if you send them at late, between the hours of 8 and 4 you will get replies to your questions. You will get to go back and forth and get full-time attention on any question that you do have. Even if we have to repeat something over and over again, you get to have that personalized help that is helpful to you. As you can see with some of the examples there, we get to exchange scripts, we get to exchange question papers, and you get to show me what it is that you wrote, and you even get markings for your questions to see how you actually do perform when it comes to a specific question or a specific subject. Grade 10 to grade 12, as well as those who are upgrading and rewriting, those are the full list of subjects that we do offer. If you are interested in any of this, for you to be able to get your price quotation, it is very simple. All you have to do is email me on that email address that you see there. When you do email, make sure that in the subject line you write your name and surname, and then in the body of your email, that's where you will tell me your grade and the subjects that you need help with. It can be one subject or it can be a mixture of subject. Hence, we are saying that you need to email for you to be able to get your price quotation. Now, because this is one-on-one, it means that it puts a limit on the number of people I can take per month. So I'm going to be limiting it to 10 students per month. So make sure that you email to secure your spot. Have YouTube recommend you more of my videos, be sure to click the like button and subscribe to the channel. And if you have any questions, leave them in the comment section below.